Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 12, 2019. So as usual, please hit the like button and subscribe to this channel. Also share this video and share this post when you get it. Stocks are again at record highs. We shouldn't be looking for any top-in patterns. We should be looking for a pullback to open new positions. Offensive sectors are leading the stocks higher, and more highs I think are expected. I'll show several examples of recent trades. Some of them are for Costco, McDonald's, and Snapchat. They're all very nice gains. So far, junk debt is signaling all clear. Treasury is pulled back, and this is helping to decrease the yield curve inversion. We'll look at that. Dollar is being pressured again, so hopefully this time is the charm and dollar will eventually turn around to the downside. If this is the case, then gold will benefit, and I think it's already been benefiting, and I'm going to show a couple of examples, especially Royal Gold, which is up big. And we'll look finally at the cryptos, and I don't think the correction is yet over. So let's look at S&P 500, Etf Spy. These are again record all-time highs. So this is a great example of a bullish chart. No matter how much people talk about, oh look, there's some top-in patterns and I think it's gonna roll over, nobody knows anything really, and we should be looking simply at a trend. And if the trend is up, which it is in this case, then we should be looking to buy. Where do we buy? At what level do we buy? Here's an example of QQQ. This is an actual alert right here on the 4th of June. Why did I send an alert here? Because you can see that the price has come down towards the indicators, and I'm talking about this blue line. Throughout the presentation, again, I'll be using my own indicators. You can have them on your chart as well. Simply sign up at MasterCharts Trading. To get back at QQQ trade, this is the alert that was actually sent. Why did I send it? Because we had a dip below the blue line and a close above the blue line, right there on the 4th of June. Alert was sent, and we have a nice breakout to record highs. This is the essence of my trading technique, is that we simply look for a, if we're talking about only stocks, let's just talk about stocks for ease of use. If we're trading stocks, we simply look for stocks that are already above the blue line or are breaking out above the blue line, and we simply buy them around the blue line. And then we are riding the new wave higher and higher. Eventually, sometime in the future, we don't know when, the stock market will roll over and we will see new lows, but this is not happening now. So what we're looking for is we're looking for a pullback of this type. I mean, this was just an incredible opportunity from April highs into the June lows, and it just was perfect. So hopefully my subscribers took some of those opportunities. Here's another one, Dow Jones, same thing. Basically, we have a touch of the blue line and a close above it, and then we have a breakout to new record highs. Some of the sectors that are leading the stock market higher are financials, and these are 52-week highs. They're not record highs yet, but the fact that financials are leading the breakout is a very good sign because these are more volatile stocks and they're more what's called offensive. In other words, during the time periods when investors think that the risk is good in the sense of they want to take a risk. The investors want to take a risk, and this is reflective in the price of the security, especially the stocks, which are higher risk than, for example, bonds. So this is showing a very good appetite for risk by the investors. Financials is an offensive sector. XLY the most offensive sector, I think, out there, in the sense of, basically this is very economically sensitive. And if the economy was not doing good, this would not be at record highs. This is pretty straightforward. If the economy was not doing good, we will see the opposite. We will see new lows. And again, notice here, very straightforward, no thinking trade. This is what I really like about trading, is that if you simplify the trading to simply entering orders, then you will have a much easier time surviving in the trading environment. Trading is super nerve-wracking, I guess is the word. And a lot of new traders, I think something like 95% of traders wash out within a year. Just a few really are left, to do this more of a long term. I've been doing this for probably about 8 years, and trust me, I've been through all of these periods, and I tried many different systems, and finally I came up with this system, and it just works perfect. I don't have to think. That's the beauty of it. Another one, XLK, technology sector, similar to QQQ, just the composition is somewhat different. And you can see again record highs for technology. Very much an offensive sector as well. In other words, higher risk than other stocks. So this is showing good appetite for risk. I wanted to show a few trades that we have recently done here at MasterCharts Trading. So again, I am not making this up. The lines are being drawn in real time. I'm not drawing them, as I'm speaking, because this is an actual indicator. So it calculates this. So this is an alert right there on the 8th of March. Why did I send this alert? It's straightforward, because I have a close above the blue line. And this is the reason why I like it, is that I remove my brain and I simply buy above the blue line. Notice that this particular trade is still going, and I would still consider holding this stock. And you can see a very nice 26% gain on this particular trade. Excuse me. Another trade that we have recently sent an alert about is McDonald's, and you can see also a very similar kind of pattern as I just showed to Costco, but a little bit different, because this trade was already, you can see that the stock was already above the blue line, and I simply wanted to see a pullback towards the blue line, which did occur here in February. This is all we did again. We simply waited for the pullback, and then we bought on breakout above the blue line. Notice also a very nice 21+% gain. And this trade is probably still going. I mean, if you have a position, I don't have a position open myself, but if a subscriber took it, then I would, keep it open still. Another position that was recently opened, and in fact this is my position, I opened it myself as well, it is for Snapchat. So Snapchat, here you can see a couple of alerts. First alert was here on the 11th of April, and then right there on the 23rd of April I actually opened the position myself. So I bought right there at $12.04. Notice that right now the position is up already over 35%, and it's still going. I think it could actually continue even higher. So that's the essence of what we're doing here at MasterCharts Trading. Basically, is we're looking for opportunities, and then we look for a close above the blue line. As far as the intermarket relationships, here is junk bonds. So junk bonds also broke out in January of this year, hit 52-week highs and are pulling back slightly. Overall, junk bonds and stocks correlate very highly to one another, so a push by the junk bonds towards new highs is a welcome sign for stocks. TLT, so treasuries. Let's switch gears a little bit and look at the more defensive parts of the market, and that is Treasury Bonds. So this is as defensive as it gets. I still have a position myself, opened it way back here in January. Still have about a quarter of the position left, and I may want to close it pretty soon, just depending on about this pattern. It's possible that this is a top-end pattern, but I'm still going to be looking for a pullback towards the blue line to open a new position, or send an alert to my subscribers. Overall, a pullback in bonds, I think, is a welcome sign. So let me again show the yield curve as it stands right now. So yield curve is right here. You can find this instrument on stock charts. It's in chart tools, and you can look for it right there, dynamic yield curve. So what this is showing is the yield on various length treasuries. You got 3 months, 2 years, 5 years, etc. And on the right side here is basically what's the stock market doing at the same time. So as I have shown in the past, the yield curve inversion looks kind of like this, where you have the lower or the shorter end of the yield higher than the 30-year yield. So this is a yield curve inversion. Notice what happened afterwards. We had the eventual collapse of the stock market. A similar type of pattern occurred back in year 2000, in July 2000, and you can see a shorter 3 months yield is higher than the 30-year yield, and afterwards the stock market also dropped. So what is happening right now? Let's look at a current picture. So let's look at, first of all, 5th of June, which was last, I'm sorry, I need to get to July. Here we go. Look at July 5th right there. So you can see the last Friday, the yield on the 3 months treasury bills was close to 20, maybe like 15-year. What's happening right now is that we have a little bit of an improvement. You can see that the short-term yields dropped a little bit, longer-term ones went up a little bit. So overall, at least we dropped so that the yield curve inversion only touches the 10-year yield. Now, there's been talk now about lowering of the interest rate, and this is exactly the reason why the interest rates, I think, should be lowered, is to prevent inversion of the yield curve event. So if this kind of event happens, at least twice in the past, we had a collapse of the stock market. So overall, a pullback in bonds is a very welcome sign. Additionally, a potential lowering of the yield curve is being talked about right now. Rather, potential lowering of the yield rates is being talked about right now, and there's hope that they will be actually lowered again, or rather, they will be lowered from to almost 2% to a little bit lower. Right, let's switch gears again, and now let's look at some of the commodities. Here's oil. Overall, nothing really changed yet in this graph since this push higher from June 20th. We're still kind of moving higher. So again, I'm not really married to one side of the market. I could be buying or I could be shorting. It makes very little difference to me. So right now we're kind of finely poised, and we could go either way. my money, I would still bet money on the downside, especially if we see a breakdown below $55. Briefly, natural gas is rebounding off the 20th of June lows towards the yellow line. This is where I would potentially, if I was aggressive, I'm not aggressive, but if you're an aggressive trader, then you could try and short it around $2.60. I would short it around $3.20. Right, let's continue to DXY, which is a dollar currency index. So notice these lines here on the chart. You can see green, the distance between green and yellow line back in April was relatively large, and you can see that the lines are just coming closer and closer together. What does this mean? This means that the trading range is narrowing, and during the narrowing of the trading range, quite often a change in trend also takes place. So right this instant, dollar seems to want to go higher, but I am thinking that there are some indications that the dollar is about to turn around to the downside. So I'm watching for a breakdown basically below 95.50 currency index. For the euro, it will be the opposite, obviously. Notice what happened here. Right at the red line, the shorts came in, pushed the prices lower. So this is a very nice trade if you execute it. Right there, let's say on 25th of June or any on 26th, 27th, 28th of June, you could have gotten in right at the red line and then nice move lower in your favor. So right this instant, I'm still watching for a breakout. I'm not really trading much Forex, occasionally open position, but not much. So New Zealand dollar I wanted to show as well, one of the stronger currencies. So New Zealand dollar is approaching this breakout level at 0.676, and if that happens, then I think New Zealand dollar will be in a bull market, and then we can start buying it. USD MXN, I think it's the opposite right now, and in fact I myself opened the position. I'm gonna change color to white because it's usually how I mark my own positions. So I opened the position right there, short at 1909 or so. Let's see where it gets me. Hopefully I'll get something at least. But this is a bearish security because notice that we closed below the red line and we have not been able to rally above the blue. So overall bearish security, we should be shorting it. This is exactly what I'm doing. Let's go on to gold. Here's XAU USD. If you can trade it in Europe and other countries, you are able to trade it. In the United States, you are not able to trade it, so you're stuck with GLD, for example, which is just fine as well. So GLD alert was actually sent as well for over 11% gain. Now overall, it feels like maybe this is a pennant or a flag. Like this is a flag handle and this is like a pennant, and maybe we can see a breakout. And if that's the case, then we should be able to see at least this much duplicated on the upside. Especially if dollar comes under pressure, then I think this will just break out higher. We are trading it obviously on the upside. You want to be on the correct side of the market. You do not want to be on the incorrect side of the market. How to tell if you're on the correct side of the market? Vast majority of the time, if you simply look at my indicators and just see, are we above the blue line for stocks and for some of the for the Forex? If we are, then we should just keep buying. And then the opposite, if for Forex I give the red line as the trend setter. So let's say we have a breakdown like this. If we have a breakdown, then we start shorting. But for stocks, for example, I don't know, Snap, oh no, maybe McDonald's. If it was McDonald's, then I would have waited until we saw a close below the yellow line. Because for stocks, I give the benefit of a doubt to the bulls. The bears really need to work hard for the stock market to turn around and for individual stocks to turn around as well. That's why I set the bearish trend setter for stocks as the yellow line. But for commodities, set the red line, and for dollar, forex, gold, all of those things I set the red line as a trend setter. So overall, gold seems to want to go higher, and again, if dollar comes under further pressure, then this could just break significantly higher. This is my position in GDX. I opened right there on the 31st of May. My favorite type of trade. You open it and it goes immediately in your favor. And so I sold a quarter right there on the 11th of June and sold another quarter on the 25th of June. And it looks like it wants to go higher. So I think I'm holding the half of my position and see where it's gonna go. I mean, if dollar breaks down, this could just pop higher. So another trade example I wanted to show. This trade example was in one of the gold miners. I think I already showed this one, Royal Gold. So alert was sent here on the 31st of May. This could have been another alert right there on the 26th of April. But sometimes there's beautiful examples like this. We see a breakout and it just goes right in your favor. I mean, look at this move. 25% almost in just a few weeks. So if you open, congratulations. I did not open Royal Gold. I did open Barrick Gold. So let me show you that. And there is that breakout, so up 31% or so. I still have a position, half of the position open, holding it for a little while and see what's going to happen. All right, let's wrap up now with the cryptocurrencies. Here is Bitcoin, one of my best trades of career, I think. I bought Bitcoin right there at 5,711, sold a half, it continued higher, sold another quarter of the original position, and it's kind of meandering now. So overall my position is up significantly. I mean, this is like 100% move basically, from 57 to 14, more than 100% move. I want to see, maybe it's done correcting, maybe not. This is a very steep advance, so there needs to be some time, at least time, for the indicators to come back to kind of, or rather for the overbought condition, which was definitely overbought here on the 26th of June 2019 this year. I think we need to have some relief for this security. So I don't think the correction is done. I doubt we'll see a new high. I mean, anything is possible. I doubt we'll see a new high before a few more weeks at least. I think we need to see more sideways action to slightly down. Litecoin, same thing, kind of pulled back significantly, trying to bottom here around the blue line. I wonder if it's done or not, so we'll see. Overall, breakout, or rather alert was sent here on 26th of April, and this is a 100% move as well, so hopefully you took the opportunity. Finally, Ethereum, here an actual alert as well, here on 13th of May, with a sweet, almost 80% move in your favor. Actually, more than 80%, 85% move in your favor. Hopefully, again, you took this trade. All right, so please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on the sign up right there and sign up for one of the 3 services. So recently we changed a little bit how the services are presented, and we have now 3 different services. We have alerts, which is what I was just showing you for the various. I have I monitor a lot of securities. I probably monitor close to 200 securities or so. Various securities. You can see that there's stocks, bonds, gold, cryptos, ETFs, individual stocks. So there's lots of securities that I monitor. Only the best ones, of course, I select every day, and I look for the kind of the best patterns, I guess is the word, and I send alert on those. So this is really a bargain basement price at $24.95. It's perfect for traders who are just starting out and really don't want to bother with trading on their own. Now, if you're a serious trader, then you definitely want to have trading indicators for yourself, and the indicators are these: the green, the blue, the red, and the yellow line. You can find them on TradingView. They're available on TradingView, but you need to be approved first in order for you to use it. So sign up here first before you try to apply the indicators to your chart. And these are $29.95 if you don't want anything else. Overall, I think the best price is obviously both alerts and indicators, and you get well, obviously both alerts and the indicators, what I just said. So again, consider signing up. If you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye-bye.